by Expedia could drop 80% or more, and these companies aren't immune.
Yes, absolutely. If you look at the travel sector and how it has been so decimated by coronavirus, really shut down, travel companies are among the biggest advertisers, particularly on places like Google and Facebook. Travel was one of the biggest sectors in terms of advertising on Google last year, responsible for $11 billion in total spending. And now search spending on Google is expected to be down by 50%, if not much more. We heard from Barry Diller that Expedia, which he's the executive chairman of, is going to be dramatically decreasing its spending, by billions of dollars, going from $5 billion down to $1 billion. And Google especially is really going to be feeling that. And we'll also see Facebook also, when it reports tomorrow, we'll see just how much it's exposed to that travel and then the retail sector as well.
Yeah, and what's interesting, Sarah, we've talked so much about the big tech companies and, the trillions in dollars of market cap. They get a lot of ad business from small businesses. So you look here at how the price of Facebook ads is declining. A lot of that, Sarah, is actually small and local business advertising, right?
That's exactly right. And when you think about how they buy those ads, those are self-serve, meaning that they have no contracts with Google or Facebook. And so if they sense uncertainty, they're just going to stop spending. They're not obligated to maintain a contract like they would with something like television. The other thing to keep in mind is that in the beginning of this, when we're looking at Q1 earnings through March, small businesses weren't able to update their creative. They weren't able to forecast what products were coming down the pipeline. So there was no chance at marketing in March. Looking ahead, I wouldn't expect it to get so much better, but at least some of these small businesses, I'm thinking about some of direct-to-consumer upstarts like workout companies that can work out from home. At least these companies have chance now to transition some of their marketing for the second quarter.
That's a great point. And Julie, I also wonder how much of this is priced in. And again, if it matters, no one's questioning their dominance. No one's saying as a result of coronavirus, they're going to lose market share, right? So it's just more about, I guess, testing their resilience when ad revenue dries up somewhat.
Absolutely. Kelly, together, Google and Facebook comprise about 60% of all digital ad dollars, and it is very possible that they will grow their market share through coronavirus because what they do is so measurable. But I think there are really two ways of thinking about this here. One is in terms of categories. There are certain categories where ad spending is really ground to a halt. Travel, of course, being foremost among them. Also, restaurants not spending on advertising right now. And then the other category is just in terms of direct response versus brand advertising. Brand advertising has fallen off dramatically. Facebook, because it does have a certain amount of direct response advertising, a lot of those D2C brands, click here, click through to buy this, to watch this video, to download that. Those direct response ads are going to do much better and be much more resilient than the brand advertising. And so we'll really see how this all shakes out, but it'll be really interesting to look at advertising, sort of a proxy for the health of the consumer spending environment.
Sarah, as we go, anything you'd want to direct people's attention to in these reports?
Yeah, I'd say to echo Julia's point, tech giants are definitely going to take on the brunt of these losses, but analysts expect them to come out stronger on the other end simply because their balance sheets were so healthy before this. It's some of the smaller upstarts that take on advertising. I think of companies like Twitter and Snapchat that I think are a little bit more exposed here just because their businesses aren't as big.
That's a great point, especially like you said with the self-service portals. It reminds me of how easy it is to churn off of streaming devices versus traditionally cutting the cord.